Hi! In this video, I'll explain how arbitrage between spot and futures works, how you can make money from it, and what risks are involved. I'll use the simplest terms possible, so even beginners can understand. The video will be very interesting and useful. Watch it till the end, give it a like, and subscribe. Let's get started. Let's start with the basics. What is spot? Spot is buying cryptocurrency. Did you buy cryptocurrency? That's it. You own it now. A future, on the other hand, is a contract for cryptocurrency. This means we can bet on the price going up or down without actually owning the cryptocurrency, just by buying a contract. In other words, we're betting on the future price. For example, let's say a token costs $10 on spot and 11 on futures. This happens because of funding, demand, or market expectations. And this is a great opportunity for arbitrage. But now the main thing, how do you actually make money from this? When we see such an opportunity, where the spot price is lower and the futures price is higher, we need to open two positions at the same time. We buy spot for a certain amount and open a short position on futures for the same amount. It's very important that we enter with the same amount for both positions and don't use high leverage. So for example, we buy spot for $500 and short for $500. And because of the price difference, when the spot price aligns with the futures price, we close the position, thereby locking in the spread and taking the profit. Let's go back to the example again. Let's say some token, for example Optimism, costs $10 on spot and 11 on futures. In the ideal scenario, when the spot price aligns with the futures price, let's say the futures price drops to match the spot price, the token is then $10 on both spot and futures. And we open the short at $11. Accordingly, we have $1 of profit for each token. How do we make money when the prices converge? By closing the position and taking the profit. The spread between the spot and the futures, that's our profit. Why is the price different? Because of funding, the payments between market participants. Sometimes long traders overpay, which causes the price to rise more on the futures market, while the spot price doesn't have time to catch up. The second reason is demand for hedging. Large players can put pressure on the market and thus push the price, and the futures will move separately from the spot. And third, of course, are emotions and panic. The market moves because of fear and greed. And when people get scared and start selling, the price reacts much faster on the futures market than on the spot market. Now let's look at the risks in arbitrage between spot and futures. The first is funding. If you are shorting and the funding rate is highly negative, you will have to pay fees every 8 hours. That's why it's important to keep an eye on the funding rate. The second risk is leverage. If you use high leverage, you run the risk of liquidation. So at the beginning, don't use high leverage. Up to 3 times leverage will be enough for you. The third risk is that derivatives can deviate for a long time and prices may not converge. You might enter a position, the spot price will stay at its level, the futures at theirs, and as a result, the spread will remain constant and never converge. So you could end up stuck in a position for a very long time. Yes, these kinds of risks also happen. The fourth risk is commissions, so be sure to factor them in when calculating your profit. And the fifth risk is a margin call. If you make a mistake with the volume or leverage, you could simply get liquidated and lose all your money. So again, don't use high leverage. Now, I'll give you some tips on how to start spot plus futures arbitrage. The first tip is to use a small volume. Try entering positions with $100 or $200. Yes, you'll only make a couple of bucks there, well, depending on the spread. But in any case, you'll understand how it works. Second tip, don't use leverage. Short with 1 times leverage and buy on spot for $500 and short for $500 with 1 times leverage. That's it. You don't need leverage at this stage, at the beginning. Third tip, keep an eye on the funding rate so that it doesn't get too overloaded, because if it becomes highly negative, you'll be paying fees and this funding rate can eat up your entire position. And the fourth tip is to always calculate the fees, because they affect your final profit. Now I'll show you one of the cases of spot plus futures arbitrage with a 2% profit. It's a small quick trade, literally, it didn't even take a minute. We took a profit of $15 from the CSPR token. Let's go take a look. The arbitrage was between the MEXC and Gate exchanges. The price dropped sharply, and because of that, arbitrage opportunities appeared. On one exchange, the price didn't have time to fall, while on the other, it had already dropped significantly. That's why a spread was created, which we took advantage of. You can see my position here. I was shorting on MEXC. Now I'll enter all this data into the table so it can calculate for us. You can see my purchases on BINX. I'm entering all this data into the table, every detail. I'm also entering the data for my short position on MEXC. So look, I entered on BINX at a price of 0.011 and on MEXC I shorted at a price of 0.11205. Because of this we had a spread of about 1.86%. And I closed the position almost at the complete convergence of the spread. So there was a remaining spread of 0.29. So in total I bought at 0.011, sold at 0.01127 and I opened the futures at 0.011205 and closed at 0.011259. That is, I closed the position almost at full convergence and locked in $15 profit, $15.81, literally in 1 minute. You can see the entry time for the trade, not even a minute passed, and that's how quick the trade was. Thanks to spot plus futures arbitrage, you can open such positions. The main thing is to understand the essence. Where the token is cheaper, we buy on spot. Where the token is more expensive, we short. And such spreads can occur not only between different exchanges, but also on a single exchange. So now I'll explain how to find such spreads. By using the Arbitrage Scanner software, it automatically finds spreads for you. You set the parameters for the exchange where you want to arbitrage, the transaction amount, choose the spot plus futures strategy, configure the minimum profit, minimum lifetime, maximum lifetime. The spreads can be adjusted as well. And here at the bottom, we have a table that displays the spreads for different tokens. It shows the exchange where you need to buy the token, where it's cheaper, and the exchange where you need to short the token, where it's more expensive. And when the spread converges, we close and lock in the position. And thanks to this service, you don't have to search for or monitor exchanges yourself. You just enter the necessary parameters. You can also set up notifications in a Telegram channel, and spreads will be sent directly to your Telegram. You see a spread, go in and lock in your profit. So it's really that simple to look for arbitrage opportunities using the Arbitrage Scanner. Everything can be customized to your preferences. You can configure the table, adjust various other settings, and start arbitraging on spot plus futures arbitrage right away. They offer different types of subscriptions. I also have a promo code that will give you back 30% of the cost. So for example, you buy a subscription for $252 and I return 30% to you. All the details will be in the description. There are options for 1 month, 3 months, 6 months, or 1 year. There are also ultra exclusive subscriptions at the bottom, which give you access to a private chat where arbitrage traders share their signals and insider information. You also get your own VIP manager who will help you with any questions related to arbitrage, and you get access to all site events from Arbitrage Scanner. And right now they're giving away $5,000 and one of you could win this money. How can you get it? I'll tell you now. I'll leave a link to this post in the description. The promotion is called Win $5,000 and on December 31st we'll have the results. To participate, you need to purchase a business or higher subscription. The more months you subscribe for, the more tickets you get. You also get tickets for every approved referral who buys a subscription using your link. You get 4 tickets for reposting the promotion on Telegram or Twitter and 7 tickets for making a video mentioning Arbitrage Scanner. And one of you will win $5,000. That's a pretty decent deposit you can use to keep arbitraging and earning. So take part in the giveaway. Details will be in the description. Go ahead and check out the link below. Maybe we won't see each other again, so make sure to subscribe so you don't miss out on top content, tutorials, case studies, and much more. It's all already on our channel. Like the video and share it with your friends. And we'll see you in the next videos. Bye everyone!